So Bill Ackman's withdrawn his plans to IPO Pershing Square. Chamath, do you want to just give us kind of the background on what he was trying to do? And obviously, this was an attempted $25 billion raise as an IPO. He recently reduced the raise target to $2 billion. And when the order book came in, I believe at less than $1 billion, he scrapped the plans entirely and just announced yesterday that he's pulling the IPO. So can you just explain a little bit about what this IPO was? And then we'll talk a little bit about why we think it fell apart.
I can only repeat what I read, but I'll try to kind of translate it into non-Wall Street speak. So basically, he has a company, but what that company does is it gets investors to give it/him money. And then they invest it in all kinds of things that they deem worthwhile. It could be bonds, it could be stocks, it could be currencies, it could be derivatives. They generate a return, and then they give those returns back to their investors. So that is a hedge fund. The holy grail has always been trying to figure out how can an organization that is...
those funds are raised and distributed back, right? I mean, I think you should...
exactly.
I don't want to mean to interrupt, but just go ahead and say that. Yeah.
But the holy grail for someone who runs those businesses is when they realize, well, listen, I get paid a great profit share from those funds when I'm successful. I'm also allowed to take a 2% per year management fee, but I believe I'm building equity. And can I get somebody else to recognize the fact that I'm building equity? And that's no different than a startup, right? So, Freeberg, you're building Ohalo. You believe that you're building all kinds of really interesting things rooted in science, and you want other people to judge the value of that as measured by your equity, right? Independent of your revenues and profits today, they want to project into the future. The problem is that hedge funds have not found a very elegant way to demonstrate that they have any equity value. And there's only been a few, and the formula has been the same. So companies like Blackstone, companies like KKR, companies like Apollo, what have they proven? They've proven that they can raise enormous amounts of money. So most of these organizations now are approaching $1 trillion of capital raised. And they tell investors, well, look, don't worry about the returns anymore. Worry about the 2% because that's like our revenue. And we're generating $20 billion a year of revenue. That'll grow at some ratable proportion. We'll manage the teams. We'll compensate them well. But there'll be lots of profitability. And people have bought that story. So I think a lot of smaller organizations who aspire to be like a Blackstone or an Apollo have tried to get people to buy into this story. And I think what Bill Ackman was trying to do was some version of that, which is to say, I'm going to build an enterprise here. Pershing Square is going to be a standalone business. It's going to have enterprise value. And you're going to measure that based on the assets that I manage. And it's going to be much greater than what I manage today. And I think he manages roughly 10 billion today, but he thought he was going to raise another 25 in this IPO and then in very short order be at 50 billion. And so he got people to invest in that business on that premise. And I think folks put in around $1 billion and they valued that entity at 10 billion. And so he tried to go and raise his fund. He thought it was going to be 25. And it turned out, I thought it was 2, but Freeberg, you just said it's less than 1. I guess, or around 1. I just heard that. I'm just hearing that from you for the first time. So I guess what is the takeaway?
Chamath, real quick, this was a closed-end fund he was trying to raise.
No, but I think he's also said that Pershing Square eventually has a path to go public. That's how he sold the $1 billion of equity at 10 billion in the master LP.
Yeah, but this IPO was just for a fund. It was just
it was the IPO of the fund, and then they were planning afterwards the IPO.
They were planning afterwards. Yeah. Yes, which he didn't do.
My only point was that the fund was basically it's launching a fund, and then the goal is not the fund itself. The goal is to buttress the underlying logic to take the whole thing public, the manager.
Okay.
And that's what I mean by taking a company public in finance is next to impossible.
Yeah.
So the whole point is what are these businesses in the business of doing? They're in the business of making bets. The problem is that those bets are short-term anomalous events. Sometimes they work, sometimes they don't work. And the problem with that is that investors who are trying to underwrite 20 or 30 years of returns don't know how that's predictable over that period of time. Like, for example, you're genetically engineering all kinds of produce that we are going to ingest. If that stuff works at scale, you will have built an enterprise that theoretically has the potential, unless it's disrupted by something else, to make revenue for 20 or 30 years. So people can underwrite that. Google makes a search engine. It's going to last for 20 or 30 years. Facebook makes a social network. It can last for 20 or 30 years. The business of making bets is typically something that can only be measured in days or weeks, maybe months at best. And so I think what he ran into was that realization. It's very hard to get people to value an institution in this way. And so the thing did not work. He'll go back and he'll retool. The thing that I give Bill Ackman an enormous amount of credit for is he is one of the most resilient individuals I've ever seen in high finance, but generally as a business person. This guy he surfed some really big waves. He's landed some really good sets. He's also gotten crushed a few times. And the guy just keeps coming back. And he seems to be getting more and more refined and capable as a business person. So, he'll probably figure out a way. This is not the first time he's publicly dealt with things that have not worked. But I think it just goes to show you that in finance, these entities that try to sell a piece of the quote unquote general partner as a company, I just think that frankly, that it doesn't work. And this is just, an example, yet another example that there's not a lot of equity value in these businesses.
Sachs, some reports indicate that investors pulled out of the Pershing Square IPO because of the current market conditions, that a lot of market indices have stormed higher and that there is now less upside and it's not a great time to be entering the equity markets. Other reports indicate that investors lost interest in Ackman's fund because of his activity on X or Twitter. Do you have a point of view? Do you think that folks pulled out, investors have pulled out? You're obviously a fund manager who is very active and opinionated on X and slash Twitter. Do you think, has this affected your relationship with raising capital, if you're willing to talk about it, or maybe just comment on the Ackman, issue that he ran into? Why did this fail?
I just don't know. I honestly haven't followed his IPO process at all.
Okay.
I would say that the market we have right now, it's not the best it's been, but it's also not the worst. So I'm always reluctant to blame macro conditions without having a more specific explanation.
Do you have a point of view on investors having an issue with Ackman because of his outspokenness on various social and political issues over?
I can't imagine. No, I can't imagine that's
I don't think so. Investors care about making money. And Bill Ackman's a moneymaker. That's undeniable. The guy takes some losses, but his wins are way bigger than his losses. And he is a proven moneymaker. The problem is that I think the way in which he was trying to monetize the business is just a hard thing to do. You have to have an organization of hundreds approaching thousands of people that are raising all manner of funds. And those funds just deliver very consistent returns. Not great, but they never lose money. And that's how you get towards $1 trillion. And that's how you make it a company and not a great hedge fund.
Yeah, let me also just say, I think he's very thoughtful on Twitter. I've gotten into some disagreements with him on Twitter, other things I've agreed with. But overall, I think he makes a strong case for himself. I haven't heard him say anything out of bounds on Twitter, whether you agree with it or not. So I can't imagine that's a problem.
Some people would disagree. They think he's had a lot of comments on wokeism, as he would call it, and DEI topics. And Donald
I agree
Trump
with him on that. And I think the vast majority of the country agrees that woke has jumped the shark.
Yeah. But I think some people highlight,
if woke is so great, why is Kamala Harris trying to distance herself from every previous comment she's ever made about wokeism or DEI?
The point is more about, like what we talked about earlier, which is kind of having an authentic voice and speaking what you believe and speaking what your opinion is, versus remaining buttoned up and not speaking what you believe and towing the line.
He's in the only industry where his performance is measurable every day in precision.
Right.
So what I would say is it's irrelevant what he says on Twitter, meaning the quality of his decisions are independent of what he says because they're measurable and they are not something you can gain. And the reality is that over the last few years, particularly starting in COVID, he has gotten better and better, and he's played a very good hand. I think he's an exceptional risk manager, and he's timed it. And so the people that say that to you to be very honest, are somewhat, they're portraying their lack of financial sophistication.
Yeah, and actually, can I go further? And I actually think that Ackman's presence on Twitter X is a huge positive for him. It's an asset because he has a gigantic followership and he's able to speak directly to his audience in the way that we do. And I think the reason why people say these things is because they don't have a direct strategy. And so they want to basically badmouth people who do. But again, if you don't go direct to your audience, then you have to go through the media and then they get to define you.
And it creates ambiguity. Exactly.
So I think the fact that he's got like 1 million plus followers and, everything he puts out gets tens of thousands of likes, it's a huge positive.
Huge positive. And I think that the part of his business that he hasn't gone back to, which if he does in this chapter of his career with the following that he has, is the activism part. And I think there are two people who I think are incredible at this, and where both the written and the spoken word, they have such a mastery of. Ackman is one, Dan Loeb is the other. And I think that, in this world where you have the ability to go direct in a way that you never had before, is actually the realm of a different form of activism that I think could be extremely economically rewarding and valuable in society.